Okay, guys, let's talk about the markets. We're here in early to mid-September. We've got the election coming up, and markets have been, I guess, trading a little scared. If we take a look at Bitcoin, I mean, we have just been grinding it out, and the most choppy market environment that we've seen since the summer of 2019. So the difference, though, is in 2019, we were way off of all-time highs, and then we had the COVID panic. Right now, we're still up in this like all-time high range, but we've been choppy as hell over and under this 60K zone. I'm still net long, and I've got a long-term bull market thesis that I've been looking at, but I think all of that depends heavily on what the stock market does. If we get a recession or I guess if stocks take a dump, I think Bitcoin's going with it. And this week we saw Nvidia starting to pull back. This is a monthly chart, so the longer term view is still, Nvidia is way up, but there's been a lot of fear, and there's been a lot of people, I think, positioning themselves defensively in the face of maybe this AI bubble coming to a head, So I wanted to ask you guys a couple of things. Do you think the AI bubble is at its peak, or are we just getting started, or somewhere kind of in the middle? Do you think there's just a whole lot of risk before the election? And also on the recessionary side, on the macro side, what do you guys see? Are we seeing signs of a recession? Are things holding up? Is it a mixed bag? That's a lot.
That's a lot. Where do we start? What was the first question?
Okay. Is the AI bubble popping? Let's start there.
NVIDIA just reported net income up 152% year over year. I can't say that the bubble's popping yet.
Yeah. What is the bear case? I've seen some bear cases out there. What is the summary of the bear case that's out there?
Yeah, I think the bear case does have some merit. The bear case is that there's a lot of front loading of all of this AI CapEx. Of course, the Metas, the Googles of the world, Amazons of the world are buying a tremendous amount of GPU capacity. That's why NVIDIA's results are so good. There's a lot of demand for products that also go into AI servers, whether that's, high performance memory or networking equipment or cooling or server racks, et cetera. So this is all, of course, it all looks very robust at the moment, but the concern is that the revenues that come from AI products that these companies are selling are not going to justify all those massive expenses. And at some point, they're going to have to pull back on that CapEx. And that, of course, is just going to flow down the chain. All the semiconductor stocks are going to see demand fall off 30 to 50%. So the concern there, of course, is that you'll have a pretty hefty correction in tech stocks and semi stocks when that happens.
So basically, all the big companies bought all the AI GPUs now, and that's going to slow down in the future, and then future earnings are going to suck.
Yeah.
Okay.
Yep. That's a good summary of it.
Do you think that's true?
I think to a degree, yes, because I think particularly among even some of the larger companies, even though they have lots of cash flows to fund a lot of these investments, just by nature of those investments increasing a significant amount over the last 2 or 3 years, the depreciation from that is going to weigh on earnings unless they can find a way to really monetize that. And when you look at, we'll look at what they're actually doing. Look at Google, right? They've got now they've rolled out like AI summaries in the search engine. They've rolled out different Bard and Gemini products and in some things like Google Docs and things like that. But is it generating incremental revenue? Not right now. It's not generating, as far as I can tell, $1 of incremental revenue. Meta, same thing. They've replaced their search bar weirdly with like an AI agent that you can ask questions to. Does that increase revenue? No. Now, maybe down the line, Meta can get more advertising dollars because, ads are more effective because of AI they're using in their systems. And that's their argument. But today, it's not generating incremental revenue. So yeah, I think there's going to be a moment at which these companies facing investor scrutiny over multiple quarters as AI CapEx is ramped up, they're going to have to say, okay, where's the ROI? Do we have enough GPU capacity? And I think there's inevitably going to be overbuild of server farms and GPU capacity because that's always the case. When these big cycles boom, whether it's like fiber during the early days of the internet or it's things that happened in mobile or cloud, there's inevitably going to be overbuild. And so I think EV is another area where we've seen some overbuild. So I think it's almost inevitable. The question is, does it happen 6 months from now or 4 years from now? Investors are trying to anticipate that. So the investor reaction is going to happen before it's totally obvious that the overcapacity is already there. So that's why I think we're starting to see some of this nervousness already show up in stock prices. But I don't think, from what I've seen, I doubt we're there yet. NVIDIA's numbers are still increasing at a pace, and other companies' numbers are increasing at a pace that doesn't suggest there's been a pullback yet. So it's really hard to answer because there's the investor. When will investors actually start to price it in? It looks like maybe they're already starting to price it in, but when does the actual overcapacity become evident? It still could be a while.
Question.
Yeah.
Is it possible, though, that this spending is still going to be necessary because now everyone is just competing to stay relevant? Like Google, if they didn't put the AI into the search, right, they would have become completely irrelevant. Why would anybody go there when they can go to ChatGPT or whatever instead of using Google?
Yeah.
So it's like a lot of companies I can think of many others, companies via Adobe, Canva, they're all putting in AI technology into their platforms, kind of just to keep people, because if you don't now, you're going to lose them.
Yeah.
So I almost think that it's like this race now where everyone's just having to get the AI technology integrated, and it's essentially just to retain customers.
Yeah, it's an AI race, and if you don't keep up, you may. And Mark Zuckerberg's even said as much on a recent earnings call. He said, "Well, there's more of a risk of underinvesting than overinvesting at this stage because of what competitors are doing." So they're sort of in this game theory race to the bottom. Canva is an interesting example you just brought up because Canva is actually attempting to put through a 300% price increase on some of its enterprise plans because of the AI features that they've added over the last year. And we've used Canva and some of their AI features on some of the individual products, and they're quite good. But are customers going to tolerate a 300%? If your price on Canva goes from $30 a user to $100 a user, are
going to piss a lot of people off.
Yeah, and we've already seen some backlash. So I'm curious to see how this plays out with Canva. And then, I do think it is interesting, though, because I do think there is an argument, maybe not even as much on the revenue side, but on the cost side for some companies. Like, there's a lot of companies that I think will be able to take out, at least half the money they're spending on call centers. Think about airlines and stuff like that use call centers, or healthcare companies. It's like, there's probably a lot of the stuff that happens with, outsourcing and call centers that could be done by a really smart AI agent or chatbot. Unfortunately, chatbots have been terrible when they've tried to replace humans in the past.
They suck.
But I think maybe this new iteration of AI models, they'll be able to do that. So there could be an argument here that maybe it's not a revenue generator, but it actually helps some companies reduce their costs a lot, which I think could be an interesting angle and might justify some of the investment. But yeah, I think there's going to be still a lot of really interesting stuff that gets built in the next 5 to 10 years using these tools. I just don't know, stock market wise, if it's going to live up to some of the price action that we've seen lately.